This is your daily financial news. A couple of quick things. First and foremost, the next 4 days, I will be attending Tony Robbins' Unleash the Power event. I forget what it's called. But anyways, a viewer of this channel and one of the experts during the week invited me to go to this event, and I said yes. I had originally thought it was last week. I messed up my schedule, but it is this week. It starts tomorrow. The reason that is important as the daily financial news will still happen in the morning. It will just happen much, much earlier. It is important for me to get this video out in the morning. The Tony Robbins events start, I think, at 6:30 Pacific. So I'll probably do the financial news at 6 a.m. the next 4 days. It will be done before the event, that much I promise. If I can do the daily financial news the day after we lost Jimbo, I can do the daily financial news early the next 4 days. I want to keep this trend going. We're almost 2 years in the making of you and I talking about what's going on in the financial markets, the consumer, cost of capital. So again, just for the next 4 days, Thursday, Friday, Saturday, Sunday, the daily financial news will occur. It'll probably be at 6 a.m. Pacific. So just got to get up early. It's okay. I can do it for you. As we look at the daily financial news from March 3rd, a couple of things are jumping out. And again, we have been talking about them on this channel for quite a while, but we can see them starting to merge together. First and foremost, ADP came out with the first read of kind of February's job growth, and it was disappointing. I don't know what else to tell you. It was disappointing. Added 117,000 jobs, again, according to ADP. Again, the big number is Friday. Friday is the big number. But again, ADP gives us a little glimpse first. We were expecting 225,000, so a significant miss. Even worse, January was revised to a growth of 195,000 jobs. So February was a drop, which was not expected, right? Because again, I have said, and I still believe that, Q1 is better than Q4, Q2 better than Q1. I believe that trend continues. But the employment picture is painting, at least in the very short term, a different picture. So we're going to see about Friday. Friday number is 210. It is the most important number of the week, bar none. Most important number. Comes in hot, rates are going up. Comes in low, more spending. I mean, it will be binary decisions. Another thing we are starting to see is GDP is being ratcheted up. GDP growth expectations for Q1. Early in the year, we were talking about 5%. We did see, I think it was JP Morgan raised it to 6.5. People now are crunching the numbers, looking at January and February and going, oh my God, we could see a 10% growth in GDP. A lot of this will be stimulus related because a lot of that landed in January. But still, the economy is growing. And if we get 10% growth, we will be right at or just above 2019 Q4 goals. So we will be growing or quote unquote expanding again. So we will be out of this trough. We will have come back. The U-shaped or V-shaped or whatever you want to call it, recovery will have been complete, and we will be growing. So again, that's important. That 10% number is important. Something else that came out yesterday, and we've talked about it a lot on this channel, with the approval of J&J's vaccine on Saturday, we are very soon going to have a glut of vaccines. And at this point, they're saying by the month of May, which is just a second away, we will have enough for every adult that wants it. And that, again, is one of those signs that we are going to come back and we are going to see what the American consumer is made of. I think we are going to follow the rest of the world. And again, we can look to China's data from last summer, and they were going ham buying stuff and having experiences. So I expect us to do the same thing. We saw another short squeeze yesterday, right? Kind of GameStop-ish in Rocket Mortgage, Rocket Corporations. I think it spiked like 70%. Shorting stocks and getting it known publicly that there's a high short interest is dangerous today. All it takes is Reddit and Robinhood to kind of focus their magnifying glass. And if your company is the ant, right, that's what I sort of thinking about it, right? I don't know if everybody did this, but you see on TV shows where, young boys are taking magnifying glasses and, burning sticks or whatever it is. That's what happens, I think, with Reddit and Robinhood, right? If they get if they get focused on one company, they can squeeze the shorts. And I think that is becoming self-evident. And frankly, if you can get in early, and get out, right? Getting in's easy. It's the getting out that we sometimes suffer. Could be an interesting play. I think they're already starting to set us up for the next big stimulus bill. I've been telling you, I'm not so worried about the 1.9. It's the next one that I'm concerned about. Well, they're already talking about America's infrastructure. There's a report out today from the American Society of Civil Engineers. They gave us a big old fat C minus for our infrastructure. I don't know about where you live, but the freeways out here aren't all that great. There's just it makes sense, right? A C minus probably is in some areas probably a generous grade. But yes, I do think we have an infrastructure bill coming. It is going to be massive. I think it makes the 1.9 look small. But again, that will be just more, I don't know, gasoline on the fire. Infrastructure bills aren't necessarily shovel ready, so they will come in tranches. And I think takes us really to 2022 with kind of a growing, robust economy that hopefully helps more and more people going forward. Something else you can see is there's still a lot of cheap money, a lot of cheap money. I don't know if you know the store Michaels. Michaels is like a craft store that sells really cheap things, right? We go there occasionally. Olivia is very talented and artistic, so we buy stuff and she creates amazing things. But they were bankrupt, and they are now getting bought by Apollo Group for a whopping $5 billion. That's a lot of money, right? Cash is cheap. We saw Nordstrom's. I did the week ahead on Saturday or Sunday and talked about Nordstrom's. They actually beat top and bottom, but they are now pointing at something that we talked about 9 months ago, and that is inventory problems. Nordstrom really has two problems. First, they have a lot of inventory in their stores that are off season, right? People are going to start coming back to Nordstrom's kind of in the spring and summer, and they are left with inventory from the winter or fall and winter, kind of a mismatch of needs, and there are going to be lots of discounting and pushing through Nordstrom's rack, which will hurt the bottom line going forward. And more importantly, this is becoming a real problem. Shipping delays. Shipping delays from around the world for new summer and spring inventory is a problem. What used to be a robust supply chain is now broken, and stuff is weeks and months late, which in a fashion season is a problem. So they are calling that out and likely hit their stocks. Mortgage applications were flat for the week. Looks like they went up a quarter point. They were only up 1% year on year, which is pretty interesting. It is going to be interesting to see what happens to refi demand, because a lot of the mortgage apps the last 6 months have been refi demand. We get rates going up, and again, they're going up today, right? The bond is up, I think, 0.06%, knocking on the door of 1.5 today. It is going to be interesting to see what happens with mortgage apps. Just a sign that we are getting to the other side of this. Lyft, kind of Uber's competitor. Lyft just reported their best week. Yes, best week of rides since the pandemic. All these early signs just tell me like we're right at the end of a tunnel. It's still dark, but like you can see better times ahead. Like that's how close it is. We can almost touch it. I think we're going to see lots of positive news going forward. The realities are that you and I have consumer inflation. The price of gas is going up. The price of food is going up. There's really two things going on in that world, right? First, there are supply disruptions like we just talked about with Nordstrom's. The supply chain that we are used to is not quite as robust and dependable as we were used to. So we are having a supply shortage of many things, and that is causing food prices to go up. Also, we have demand, right? Right? We are getting to the end of this. There are people, now using savings and buying, and again, so demand is up. In addition, on the oil side, we have a lot of folks that have ratcheted down oil production, and as the consumer flexes its muscle and gets out, prices are going up, right? Oil, which was negative $37 a barrel, seemingly 9 months ago, I think. Now I think it's over $62 or $63, which is having an impact on gas. So yes, I think you and I are suffering consumer inflation. I think the Fed will call it transitory, meaning it's a blip. I think it's more real, but we shall see. I think this is just another sign that Operation Twist is coming, something we talked about yesterday, where the Fed buys, sells the front end, buys the back end to kind of flatten the yield curve. And then finally, Facebook's CFO has acknowledged that as the consumer gets confident, happy, eager to get out of their house, that they're likely going to suffer some demand shortfall as we kind of tuck away our computers and phones and start living life again, which is interesting. I think a lot of companies who have benefited the last 12 to 14 months need to acknowledge that they are going to have some tough compares going forward. So that's what I got for you today. We do have Anna Kelly here in about 19 minutes, I believe. Sometimes her day gets busy, so we have to adjust. And then we will be talking to Mortgage Matt, I think, at 9:30 because a lot has been going on in the mortgage market. Have a wonderful day, everyone. Today's a great day to make some money, and let's be just a little bit better than yesterday. And Anne, if you're watching this, happy birthday. Take care.